Hello, and thank you for joining us at xm.com for today's Daily Market Comment by Ref Boyajian. I'm Christina Marujos. Fed Chair Jerome Powell refrained from commenting on the interest rate outlook when he took part in a panel discussion on Tuesday, much to the relief of investors. Fears that the Fed chief would use the Riksbank event to push back against market expectations of a policy reversal in the second half of the year had undermined the relief rally on the back of Friday's jobs and ISM data ahead of his appearance. It was easy to assume that hawkish remarks from Fed policymakers this week were paving the way for similarly toned comments from Powell, and thus the absence of fresh clues was welcome this time. If Thursday's CPI figures point to further moderation in inflation in December, it's likely to fuel bets that the Fed's tightening cycle is nearing the end. On Wall Street, the move improved somewhat as investors were left to solely focus on the expected drop in the CPI data, while a few outperforming stocks further lifted the broader market. The Nasdaq Composite outshone the S&P 500 and Dow Jones for the second straight day, though futures for all indices are flat today, while shares in Europe are bouncing back from yesterday's losses. The US dollar continued to consolidate on Wednesday, and most other majors were also trading sideways, with the exception of the Australian dollar. The Aussie advanced by about 0.4% against the greenback after an uptick in inflation in Australia, which dashed hopes that the Reserve Bank of Australia would be in a position soon to pause its rate hikes. Moreover, China's swift reopening poses a dilemma for the RBA, as commodities prices have rocketed higher on expectations of demand making a full recovery within months. Copper futures have jumped about 7% so far this year, and an increasing number of analysts are predicting that oil will top $100 a barrel again in 2023. In the meantime, though, concerns about a recession and some doubts about how quickly Chinese demand will rebound when COVID infections are so high are putting a lid on any upside in oil. Gold, on the other hand, has been on a winning streak lately, hitting an 8-month high, aided by the pullback in Treasury yields and the softening inflation picture. Thank you for watching today's Daily Market Comment here at xm.com.